Anant, hi, good morning. Let's first walk us through what the numbers are like, because the PAT has seen an uptick of about 30%, but on the flip side, the top line saw degrowth. Why did that happen?
Profitability has gone up on a year-on-year basis, largely for two reasons. One is raw material prices have been quite low. Crude has been at all-time low levels, as well as rubber prices have been quite low at this point of time. The second thing is that we've seen good growth in our core areas where profitability is higher, that is the passenger car segment, SUV segment and two-wheeler. So the product mix has also improved, resulting in better margins. From a growth perspective, quarter two itself is generally a low sales quarter because of the seasonality aspect. The other thing is with respect to net realizations have gone down because raw material prices have gone down, and therefore we've passed on some of the prices to the customers. And finally, we are finding the export market to be a little challenging at this point of time. We are finding a large inflow of Chinese tires in a lot of developing countries, which is having an impact on our exports. So that is largely the one category which has resulted in overall negative growth. On the other hand, the domestic market is looking quite positive. We've seen a positive volume growth of at least 5 to 10% in the first half of this year.
So what is your outlook on raw material cost, and where do you see crude and rubber prices move, and how could this really impact your margins?
Yeah, I can say that for the next quarter, there could be a little bit marginally some more benefit still to come in. After that, very difficult to predict. In my view, I think rubber and crude are at pretty low levels. I doubt they will go down further, but possibly they could remain low or flat going forward for the next 6 to 8 months' time. On the other hand, there have been fair amount of price cuts that have happened in the second quarter, the quarter just gone by, and that could have some impact on margins going forward for the next 3 to 6 months.
Share with us an outlook on the replacement in the OEM demand as well, Anant.
On the OEM side, there's been a fair amount of slowdown, particularly in rural dependent OEMs, so the two-wheeler segment, which is the scooter and motorcycle segment, as well as farm segment. Both these areas have shown quite a large slowdown overall. Whereas on the commercial vehicle side, there has been some pickup because of overall negative growth in the last few years. The base levels are very low, and so we are seeing a positive pickup in the commercial segment on that side. With respect to replacement market, we are beginning to see higher growth than we were seeing last year. Not very attractive, but I would say still over 5 to 7% volume growth in the replacement segment.
How are you preparing for the festive season? What demand are you penciling in during that period?
Right, we do hope things will pick up. We are keeping our fingers crossed. We are very dependent on really how automakers do. I think conditions are generally favorable. Interest costs are coming down, fuel prices are low. So I do hope with all of this coming in, we should see some positivity. However, in the short term, I think rural markets are quite badly hit, and that is one area I don't see picking up, at least for the next 6 to 8 months' time.
So leave us with your capacity utilization at this point in time, and what are your expansion plans?
Approximate capacity utilizations are at around 85%, largely lower utilization in the cross-ply business, higher utilization in the radial business, which is really the future technology in tires. And we're looking at some more capacity expansion of our Halol plant, which is in the passenger car and SUV segment, which will ramp up over the next 6 months. But we are looking at a capacity expansion from 3 lakh tires per month to about 7.5 lakh tires per month in about a year and a half's time from now.
Okay, and we'll leave it at that. Thanks so much for taking the time out and speaking first to us and giving us your thoughts as well.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.